We're snorting cap rates and shooting up cash flow here at Deal Junkies.
Welcome back to Deal Junkies. It's just Dane today. I'm here actually with Trevor Howard and Mike Nuss and our special returning guest, but the first time I've been on the podcast with him, Jaryn Montgomery.
That is false.
That is false.
You were there the second time.
Shoot, that's true.
Hey, you picked the right one.
That's true. That's my bad.
Gabe has been
absent. Stop pressing those.
All three times.
Goodness. Gabe's missed all of them. Gabe's in Tokyo this time. He was, I don't know where the other
Gabe's
times.
at Tokyo Disneyland. He was sending me videos.
Really?
Yeah.
There's a Disneyland in Tokyo?
Yeah. Or Japan somewhere. I don't know exactly where he is, but he was sending videos and it looked like American Disneyland, yes.
Well, I'm sure that he would rather be here hanging out with all of us.
Gabe's missed
especially
all of your
Jaryn.
episodes.
What was that?
Gabe has missed all of your episodes.
Yeah.
That's hilarious.
Why we have Jaryn on is because we're like, what are we going to talk about? We're like, we're not sure.
We need Jaryn.
Let's call Jaryn. And we're missing someone.
You didn't think we could come up with something to talk about?
Not anything interesting. We could
Just
talk all day long,
economics.
dude. Yeah, dude. I do not want to talk.
No, we need actually. There's
No.
I'm just thinking consistent.
We really
We'll
should.
do that next, but I thought it would be interesting to bring Jaryn on because you're going through the phase a lot of people go through that become full-time investors, and you're at the pivot point of stopping your normal work and going into your full-time investing. So you're probably facing the things, and I mean, you did this way quicker than anyone I know has too, but you're probably going to face the things of like, okay, how am I going to make a sustainable income now? How am I going to find these deals? How am I going to get the money for these deals? Or whatever other problems you're thinking of. And I thought it would be cool to share those because a lot of people want to be doing what you're doing.
The good news is Jaryn has lots of friends who constantly need work done on their primary residence, on their office buildings that they own, new construction duplexes, and triplexes and fourplexes as well.
Uh-huh.
And so we're probably going to be able to sustain Jaryn's income just among his circle of friends.
Are you talking about by doing third-party work?
Yeah.
You're not trying to do third-party work, though. So give us the background of so like a lot of people listening to this won't know who you are, what you've done. So like give us like the high level of kind of what got us here and where you're planning on going.
My name is Jaryn Montgomery. I am 24 currently, and I started investing in real estate when I was like 19. I bought my first house, took a break for 2 years, and then started really investing again. I have been doing commercial construction, tenant improvements for the past 8 years. So I started that when I was 17. And now I'm transitioning into some smallplex residential stuff, while also doing supervision jobs in the commercial space still for some income, and then really focusing on buying deals as my main source of income.
Yeah, and you want to transition to no third-party work, right? And all money from deals?
Eventually, I'll have to keep some third-party work for cash flow. Mm-hmm. Obviously, you need money to do deals and to live life. So I'll do some third-party work, but the main goal is to partner with people that have property, go build on that property with them, and then either hold or sell that.
Mm-hmm. And you've done a bunch of development plays too, so you're like buying larger lots, splitting them up, selling houses off of it, keeping them as rentals, or building on the bare lots and stuff like that too, right?
Yeah, so I want to hold as many as possible, obviously, but in order to keep cash flow, you have to sell a few here and there. So we've been going through that process. I think almost exactly a year ago is when we had the coaching with Mike, when I just started one of the development plays I'm finishing right now. And so
the one we did on the podcast?
Yeah, we talked about doing this transition. So
how long did I say that was going to take?
1 year later. 1 year. Yeah.
How long did you say it was going to take?
11 months.
Did you say 11 months?
Yeah, that's what the city told me it was going to take. 11 months was the minimum.
Okay. Dude,
nice.
We're 11 months and 10 days in right now.
I just did a deal with Jaryn, and he did, so from when we closed the loan on this land that I had to build this duplex to the duplex closing at sale was less than 6 months. So started construction, built it all, and sold it in less than 6 months.
You sold it to a 1031 buyer?
Yeah.
Yeah.
Which
yeah.
is nice.
Okay, so let's recap. Let's summarize on paper, like from a experience, like how a lender is going to look at you. Your track record has been you had a good job in the commercial world, W-2 salary, bought your first property, you have experience in refinancing debt, you've bought multiple properties, you have some rentals, you've divided some land over that period of time, your source of income has been your W-2.
Yep.
You have used the combination of bank loans and private debt as a way to then do those other investment projects on the side of the W-2 that you've been doing. And then in this past year, after Trevor divided his lot, you built that as a partner / third party build.
Yep.
And at the same time, since that last episode, you've also gone out and acquired or put other land in project that you can then go through the entitlement process and build on.
Yep.
Okay. And you also have a lot that you've divided since that last episode that you can build on as well. So
yes,
where you're wanting to go to now is to remove the W-2, to focus on the building side, both as a developer on new stuff that you need to develop and then build out, which you're probably going to use private capital and hard money and stuff for that, as a self-builder for the lot that you've split off, and then also as a third-party builder for people in the know that you know that are building middle housing projects in the city. And then on top of that, what we discussed is you can still 1099 work in the commercial supervision world for some excess income to help bridge some gaps that you need.
Correct.
Cool.
I don't think you'll have those gaps though if you're lining up deals based on. I mean, you may still, but like
it's going to be on its pipeline of deals more than anything.
Yeah, because based on the profits, like, because my assumption is like based on the profits you've done and the deals you've done so far while doing it part time, I'm like, if you just doubled down on that and lined them up, like, it seems like you wouldn't need to do third party work.
Yeah, having a consistent pipeline with broadening my private money partners and taking fees on those acquisitions and development and management. I basically just need a giant pipeline if I don't want any other income. So
you have to be
until I get to that point, I'm gonna rely on some of the income for the supervision of the commercial projects until my pipeline is so consistent that I don't need it.
So can you speak on? So everyone in your circle is telling you to do one thing and go take over your dad's company because you'll make a bunch of money right away and you already know it and you can help him grow and scale it. And he would like you to do it because then it's less work for him. And you're going against the grain of what everyone's telling you to do and doing your own plan. Like, why are you doing that?
There's a couple different reasons. One, I just don't have the drive and motivation to do that line of work anymore. It doesn't excite me. I don't wake up and get really excited about doing commercial TIs anymore. For me, like building that duplex is really fun because you basically give me the land. You're like, go build something and sell this and make us a profit. And that's really fun for me because I get to pick out all the stuff for it.
It was really fun for me too because I did nothing.
It's totally my direction on what I want to do with that. And when you're doing it for other people, it's not the same. So part of it was just a drive and motivation factor. Part of it is MCG is really good at what we do, I should say, and we don't want to scale that. And so it'd be more just taking over a position of working more hours, which I want to do the opposite of that. And so finding something that can allow me to do both of those things is what I think is small development infill. Yeah,
and I think you had a really well thought out plan as you broke it down for me because I couldn't grasp. I told you 100 times, just do this, just do this, just do this. And then you're like, all right, shut up. This is my plan. I was like, oh, okay.
And
that makes sense.
Was buy out your dad?
No, it's not even buy out your dad. It's like partner with your dad because your dad wants to spend less time. You already know this work. You're the best PM he has and you can run the whole company already. So like for Chad, spend less time, make more money. For Jaryn, spend some more time and make some more money, right? But well, I like what you're doing way better. It's way cooler.
Well, you've also kind of getting into this. What I went through my brain is Trevor, you do a very good job of looking through the future and seeing how much value is going to be created and how to extract income out of that, and then how to plan accordingly to extract that income while you're creating value in the future. So you don't need to. You're your brain doesn't look at these are the resources I have now, and I need to rely on those resources. And I'd say that that's an evolution from where you were when I met you 2 years ago, from the way that you've seen things grow. And so now you're probably looking at him in a different way as well, which is you've got this pipeline, you've got this track record, you have this resume now on paper, you have some now assets built up that you can go to for current income, you got some projects that are kind of some midterm income. And so now if you add on a layer of future income and then stack that future income structure right, so you can extract income as you're creating that value, now you don't necessarily need to rely on the W-2.
Mm-hmm.
Yeah.
No, I think what you're doing is right. After you explained it, and it's pretty cool.
I think it's right because you're excited about it.
That
I'm
too.
very excited about it.
That's the only thing that makes something right. Because everybody can feel that.
Yeah.
Like when you're excited about doing a thing versus when you don't really want to show up, like people know.
Yeah.
People can feel the difference in energy. And so then when you're super excited about it and you bring it to somebody else and you're like, this is what I want to be doing. Here's why. Even when it's on a specific deal, like people are like, oh yeah, let's do it. Yeah, go for it.
Dude.
I don't want to think about it.
Yeah.
It sounds like you really want to think about it. So go for it.
Yeah, so for those people listening, I've been meeting a lot of friends of friends lately who don't like what they're doing, and they spend every single day like, I don't like my job, I don't want to do this, but not changing it. So for all of you who are doing that, if you can find something you like to do every day, life is really cool. But if you're not doing that, not super cool.
And don't ruminate on what you don't like to do, because you're just going to keep doing more of what you don't like to do.
Yeah, you got to take some action there, because I think everyone can find something they want to do and make the amount of money they want to make. And like, cause like this guy I was talking to, he's like, I'm just trying to make like 80 grand. Like, I was like, dude, there's so, he's like, but I don't have this education or this. And I'm like, dude, there's so many jobs you would probably like better than what you're doing that would pay you more than that. Like, and they're not even, they're just like this mental roadblock.
Yeah. Trevor can show you how to make $0, but be really happy doing it. Stoked to wake
And
up
you have to
every
live off
morning.
$12,000 a year.
Yeah. And you have to live off rice and chicken.
Hey, that's what the professionals tell me. Rich Dad told me to make zero money on paper. That's what he said.
He's good at
Dude.
it.
I want your tax return to look like
The
zero.
biggest lesson from Rich Dad, Poor Dad. The rich don't trade their time for money. They trade their time for assets.
Yeah, that's a really good lesson. What I really took out of it was the financial statements. You really need to understand financial statements. I went to a Ducks game last weekend with one of my friends, and we become friends, and he's lent me money on some projects. And really good earner, not really educated on the investment side.
Yeah.
And we was able to just talk, like the whole ride down there was talking about your P&L. So there's a P&L and there's a balance sheet, and those are two different things. And your P&L leads into your balance sheet, and your balance sheet leads into your P&L. And through that conversation, be able to, oh, this is how, so, you know, good debt versus bad debt, would, you know, paying down debt versus not paying down debt. So
Yeah.
anyways, we got on a
Okay.
sidetrack there.
Yeah, back to Jaryn. Okay.
But he has good financial statements, which makes it helpful to move. Like a lot of people, the mistake they make is they quit their W-2, but they don't have another path to income. More importantly, they don't have a track record to show a lender to in order to, like, part of the magnet of getting money is not just the deal that you find, but it's the other parts that you can wrap around it from an experience and paperwork standpoint.
I was telling Jaryn, I was like, dude, just quit your job. You'll be fine. The whole time I was like, he's like, I'm going to save up this much and have he did the responsible way, but I was like, you'll figure it out. Just do it.
That's not
He
the
didn't
best
listen
way
to
to
me.
do it. Yeah, no,
I
you should
knew he
definitely
would have done it though. I knew he would have been fine.
talk to your
Yeah.
mortgage broker. Definitely talk to your mortgage broker.
I just took the stress out of it.
I was going to say it's definitely a tolerance for stress thing.
Yeah.
Because like even what you did would stress other people out, and so it's just finding whatever threshold you know is right to not make you overly stressed.
Yeah.
Right. Like some people would have wanted to save up even more money and had like a better plan in the pipeline, even more full, and that's because they couldn't have handled like the stress of just quitting their job and then going into development and just hope it's like, okay, well, now I have to close deals. I got to raise money
have
from
faith.
people. I have to actually be able to perform.
Yeah.
I don't think I mean,
Yeah, you don't.
Also-
it's unknown. It's all unknown.
Not to mention if I own real estate with partners and I don't have an income and then something goes wrong and I have to write a check for something.
capital call. Yeah.
Yeah, that's not fair to them probably.
Yeah.
So
Very good on you. Okay.
Well done.
We did not listen to Trevor.
I agree, dude. I don't give the best advice.
yeah.
All right, so tell us. I want to hear more about this deal because you're going under contract on that interesting deal, like where you're splitting all the lots. I want to hear like how you're doing that and like the in depth of it.
you just closed on that, didn't
We
you?
just signed.
Today.
I signed like 2 hours ago.
Yeah, that's what he was
sick.
saying.
Congrats.
Yeah.
So I want to hear about that deal and what you're doing with it, and then I want to talk more about like how you're going to fill your pipeline. But start with that Kaiser deal.
Yeah, it's a 900 square foot house on a half acre in Kaiser. We picked it up for $325. I did all my due diligence, had a pre-app with the city, got the architect, surveyor, engineers on board at the beginning of it, and had quite a bit of a runway to figure all this stuff out. So went to the city, figured it all out, and it sounds like we're going to be able to get 2 lots behind.
Is that the one you were negotiating for a while because they wouldn't give you the runway? They were selling it as development lot, but not letting you do any of the DD or something?
Yeah, and I just wanted enough DD to go to the power company and figure out how much it was to extend power and make sure the city was going to allow what I wanted to do. So
yeah, so they eventually just gave in on the timeline, or what happened?
I just had to give more EMD. So
was this before or after you went into escrow initially? Was this before getting into escrow
This was
with
before.
them? Okay, so you're just trying to negotiate a due diligence period before writing them an offer or getting an offer accepted.
yeah, well, I wrote an offer with the DD that I wanted at their purchase price.
Gotcha.
It was $5,000 below purchase price because the numbers already made sense. And
How much due diligence time did you want?
I wanted 30 days, I believe. And
They didn't want to give you
they
30
wanted to give me
days.
10 or 15, yeah.
Okay.
And I was like, I mean, it takes a week and a half to set up the pre-app with the city, so.
Yeah, usually 90 days.
Yeah, Kaiser's actually pretty fast. Luckily, my architect that I'm working with, shout out Matt Johnson.
Dude, shout out Matt Johnson for putting together our podcast studio too.
Yeah,
This episode brought
He
to
does
you
it
by
all.
Matt
Lift
Johnson.
architecture.
Lift architecture.
he was already doing a similar project in Kaiser, and so he just went through this whole process. And he was like, out of all the cities that you could pick around here, Kaiser's one of the top
Yep.
that you could go through this process with. So that made me feel a little bit better too. But went to the pre-app, got all my questions answered.
So map together site plan for you, a little bit of engineering, a little bit of road work, some utilities.
Yep.
Here's where the units are going to go. No architectural renderings, just a land use site plan. This is what we want to create.
Yep. Took that to the pre-app. They were like, here's what you have to do for this. Fire turnaround. You need this much room. Stormwater management. You need this and this. And we said, okay, we already knew that we were going to have that stuff. So it was just fine tuning that stuff a little bit.
How many units? What's the site plan? So you have an existing 900 square foot house.
Yep.
And what do you want to add to it?
It's kind of rectangular, so it's in the front left of the front left corner. So we'll have a private driveway that comes off the right side of the house down the right lot line.
Okay.
And then we'll have 2 7,000 square foot lots.
So flag lots, 2 7,000 square foot flag lots.
Yep.
Okay. With the flagpole access,
Yeah.
Okay.
And then a little fire turnaround.
How wide's your flagpole?
How wide's your flagpole?
25 feet, I think.
Because
It's a personal
because of the fire.
question.
The
For people
turnaround.
listening that don't know
it's
what
actually-
a flag lot is, he just means it's a carve out and you have the main portion of the lot behind
The
another
driveway,
property.
Yeah, the driveway is a flag pole.
Yeah, it looks
and then
like
the
a
lot
flag
is
flying.
flag. Yeah.
And then there's a little T, basically, for
the
fire
turnaround. Yeah.
Yep.
And why do you have to do fire? You can't just sprinkler the units?
No, they'd rather have the fire turnaround, even
Yeah, I'm
for
sure they
ambulance
would.
access, too.
Sure they would, but
Yeah,
why do you
wouldn't
need
they
to?
like that?
How deep is your lot?
300 feet?
Why are you trying to fight the
300?
city?
Yeah.
Mike, you got to work with the city, not fight the city.
No,
Just
you
do
gotta
whatever they want.
Fight them in order to work better with them. But like, for example, we have one that's 250 feet deep. So our fire code it's by their path, which is their ropes, their fire lines. So it's not a whole road. So we got an exception to the code that because we're over 250 feet. So we're within 10%. We just have to sprinkler everything, but they're not doing a lot of requirements.
Gotcha.
But because you're 300, you're going over 250, you have to bring a truck all the way back there.
Yeah.
That sucks.
All right, that's too much detail. Who cares
No,
about
that matters. That matters a lot.
All right, what are you doing next?
People should know, like, one of the biggest reasons people fuck up is they don't understand, oh, it's this deep. That means fire access is different, and that completely changes what he needs from a space standpoint.
Yeah. And whether there's a fire hydrant nearby.
Correct.
And then, yeah.
I hate development.
all that stuff.
I love
It's
development.
all the fun stuff. that
Jerry,
nobody
I'm
thinks
actually
about.
going to need your help on a house that I'm developing right now.
Okay.
Okay, so you're going to
Let's do it.
create 2 7,000 square foot flag lots, and what do
Yep.
you want to build on those lots?
We're going to do 2 nicer duplexes.
A duplex on each lot.
Yep.
Is it going to be the same plan that you just built for Trevor? With Trevor?
No, that one was like a front and back unit because it was a narrow, long
That
lot.
was like a under a 4,000 square foot lot.
Shotgun style.
Shotguns.
Yeah.
Not really, but it kind of looks.
So these are
So,
going to be wide driveways,
side, nice.
garages. Yeah. Okay.
Yep. Since we have the room.
Are you going to sell them as a duplex? Are you going to condoize them? Are you going to build and hold them? What's your plan?
The original plan is to sell each duplex in the house. So just to build, sell all of it. That might change depending on the final numbers, how long it takes.
So how'd you finance
rates
this
are.
thing?
So I went and got a construction loan from my favorite lender, Renovo.
Shoot.
Dude, why am I not getting referrals from Rants? I feel like I've introduced them to everybody. Rants.
Because I sent
I
Jaryn to
introduced
Sean did,
Yeah, but how
actually.
did you
Actually,
meet
I introduced Trevor to Sean, and Sean introduced Jaryn to Ray.
You did not introduce me to Sean.
Whatever, dude.
Yeah. So they gave me a purchase price, and then I think it's like 78% loan
Okay.
to value.
Loan to cost.
Loan to
So
cost.
you found a partner, got some private money, got
Yep.
this Renovo loan. They're going to help you do what with that money?
We're going to rehab the house.
Okay.
And then they won't pay for the horizontal development of
Okay.
the lots. So we're going to be in probably between 90 and 120 in the horizontal development.
What's
Okay.
horizontal development?
All of your utilities, your road work, dirt work, all of the fees to split the lots, all of the surveying fees, all that stuff.
Okay.
So do lenders typically finance that, or is that often like a thing you have to pay for?
I don't know because I haven't gotten a lot of development loans. But I know,
Depends on your relationship with your lender.
yeah, I know Renovo doesn't typically. I'm sure there are more bridge type loans out there that will pay for it.
Okay, so you said 325 purchase price,
325 purchase price,
75 for the house rehab. How much?
50 for
50. So you're at 375 there, and then another 125 ish.
120, yeah.
Yeah.
For development.
Okay, so you're in
So
at
500.
495.
Yeah, 500 grand.
And then 500. You got interest and some loan fees, 520 or whatever. Okay,
So
you're-
you just sell it for 550 to get the land for free. You're going to sell the house. So
The house will be worth like 340 on the back
So
end.
you're going to take $200,000 loss into the lots,
Yes.
but they will be.
do you
entitled
consider that a
lot.
loss?
It's a lot, but you're entitled, right? So now you have permits to build those duplexes, right? Or you're just now after that phase one, you're going in and then paying for and permitting 2 duplexes.
Yes. So,
Okay, wait. So people follow this, and so I follow it. So you're in at like 500-ish, give or take. You now have three total lots. One of them has a renovated house on it, and then the other 2 are build ready at that point.
Yes. So
Okay.
to break it down in simple form, we're going to buy a house. We're going to renovate it. While we're renovating the house, we're going to create 2 new lots behind it
Yep.
and do all of the development work to get the road in. So they'll be build-ready lots with utilities to them.
Okay.
At that point, we'll sell the house. We'll have negative, after running the numbers, it's like 80,000 in equity.
Yeah.
Probably going to be more like 100. But then the lots are worth $215 a piece.
215 a piece, or
Yeah. They
Okay.
appraised at $220 a piece.
Oh, okay.
I think that's a little high.
Okay, so you got like 400
$175.
grand in lots plus 350 in house. You're in it. Okay, so 750 with 500 of debt on it, and equity. Okay, cool.
Nice.
So you create a 250 spread, and then you can take those free and clear lots or not free, and you have equity in them, so you have cash into them, but they're free and clear. There's no debt on them. You take those to the bank, and then you're going to get another loan to build those.
So the idea is that we'll sell the house and then roll the negative equity from the lots into a new construction loan for the duplexes.
Roll the negative. Explain what you mean by that.
Well, I'll be negative $80,000.
You'll have 80,000 invested.
Yeah, but I'll set up a construction loan for the 2 lots. So
Yeah.
I don't know if it'll be a simultaneously close type deal where they close on the new construction loan while selling the old house.
So macro level, you're 500 into it. You're going to sell the house for 340.
Yep.
You're going to take $160,000 loss into the lots. So that's where your
I just
equity.
view that as like you have 160 grand into these 2 lots, right? That's the same thing, right?
Yeah,
We're thinking about it the same way?
Yeah,
Okay.
it's a basis. You have
Yeah, yeah.
$160,000
Gotcha.
basis into something that has a $400,000 value.
Cool.
So you made 240 grand in phase one, and that 240 grand then is enough equity to then just go get another loan for your hard costs. So you have enough equity there.
Or that plus.
Not to mention the 100 of the horizontal development is private debt. So it's actually like on paper to Renovo, it's only $80,000 in
Yeah.
negative equity.
Is it private debt or are you doing it as equity partner?
It's private that converts to equity.
Oh, so you did a convertible note?
Yeah.
Did you draft all this up and get it running or not?
Yes.
Yeah.
Did you use ChatGPT?
Yes.
Nice.
I did the standard promissory note and then converts
then-
to equity shares.
Nice.
Refinance or sale with.
So your
some
investor
fees
you
in there.
found with it, they collect interest on their note and then they also get equity?
No,
Or-
they get half of the profits.
Okay. So why are they not just an equity partner? Why is there a note there?
Because then I have to put them on title, and they
Oh,
don't
they
get on
didn't wanna
title. They
sign
don't
on-
want to sign on debt.
Okay, so to suffice for the lender, they come in as a debt partner and it can convert over.
Correct.
Oh, that's cool.
And so they get to give me money. And
How'd you learn how to
get
do
a bunch
that?
of money.
Dane? Dane talks about convertible notes all the time.
No, you actually told me.
We probably shouldn't be talking about this stuff. This sounds like a security. Now my newfound
Is it?
knowledge about securities, this definitely sounds like security. The other thing you can do is a participation clause. So instead of converting to equity, you have a promissory note. This is probably definitely security, but you have a participation clause in the promissory note. So that's what we've done, which is so they have a promissory note with an interest rate. You're paying an interest rate, but then there's a participation clause that says they participate in the profit. And then that clause
profit share.
is a profit share that's built into the promissory note in and of itself.
So the way I set it up, I believe, is that it is a debt promissory note at 0% interest until sale or refi, and then it converts into equity profit share. So I think it's still considered.
Which, if you're going to build to rent, that kind of makes sense. But if you're just going to build to sell, there's no need to have any equity conversion, right? You're making profit. You should just share the
split
profit.
it. I see.
Yeah.
Yeah. I think, yeah.
Cool. Were your investors excited about this deal?
Yeah.
Why are
Like-
they excited? How did you recruit the capital for this? So what is the reason they're investing in this project? What gets them excited about it?
They're stock people, and so
Are they
get
selling
average-
stock to get into
They
this?
get average. No, they get average returns in the stock market.
With
and
a lot
so
of risk? Do they have perceived risk? Do they perceive risk in the stock market?
Not very much.
Dude, the stock market and Bitcoin are crazy to me. Dane was telling me, it's just, oh, man, you have your money parked in the stock market and you can sometimes take it out and you get no return on that money for a really long time. Dane, tell him the thing. Fine.
I'm not opposed to the stock market.
I'm really opposed after Dane explained it to me.
I was explaining to Trevor how I present our investments in real estate relative to the stock market.
How you compare and contrast real
Yeah,
estate
and
to
the
the stock
perceived
market?
He sold me on it,
of
dude.
it.
I was sold.
Yeah, because the
It's my
stock market's a
job.
market. You can't manipulate anything. You just
It's
gotta
completely
watch.
manipulated, though.
It is manipulated, but you can't manipulate
Yeah.
it. Whereas
Yeah.
the real estate side, you manipulate it.
Dude, also, I was looking at this thing on Bitcoin. And I was like, holy crap, this is a lot of people putting small chunks of money in it. And then a lot of really rich people
Putting
who just huge chunks and then manipulate the market cycle and just siphon that money out over and over and over. I was like, this thing is crazy.
Yeah, but now you have so much money into it that it's like
Eventually, it becomes harder to manipulate once you have so much.
correct, and then not a bit like the
And then
the
once there's-
probability of it being wiped out goes down.
Yeah, but then it's also not regulated, so it's manipulated so easily. It's crazy because, dude, I didn't realize you could track all the wallets and where all the money goes. So they were like, I was watching
Oh, yeah.
a breakdown of like, this is how this is manipulated. Here's $50 million that came in right after this was enacted that you guys didn't get to know about ahead of time. This is a person who has insider info, and then they go do this, and then they short it or whatever they did, and then they made like 200 million, which means they took 150 million from these people who just invested and have no clue that
You're
like
talking about Friday.
Nancy
I
Pelosi.
don't know what I don't even know what I'm talking about, dude.
Yeah, that just happened Friday.
No, I'm not even talking about that one. This was like just a
I don't know what I'm talking about, but it's not that one.
Yeah. So, anyways, so they invest in the stock market. They have some cash. They're excited to invest it in something different.
Yep.
And your ability to then create value and manipulate value.
Yep.
Okay.
How'd you find such a good deal?
They're family members.
No, you mean the deal?
you mean
acquisition.
the deal itself.
Oh yeah, Dane sent it to me.
Oh, shit.
But
This was a listed deal on the market.
And it was a good one.
It was a good one.
So were there people competing against you for this property or no?
I think they had one other offer.
So like, how did you see the value and no other developers did? Because there's a lot of people in your space developing these small lots, or no?
Yeah, I'd say there's quite a few people that do it around here.
But that's just a complex enough deal, you think, where they couldn't think? Because this
is probably the simplest one you
Super
can do.
easy.
Oh, really?
But
Yeah.
it's not.
Oh.
It's
I think you just found
There's
it
many.
fast.
There's many steps and many financing pieces.
This is
though.
in the world of developers. This is not a simple deal because you have to go through the land use process before you can go through the permitting process, and so that's a 2-phase. We just don't have capital stacks that last 2 years, and so when you're now combining the fact that you're saving the house with private capital, now you have an asset that you can sell after year 1 to reset your basis. So not all builders don't want to go through that process. Developers without builders in their back pocket don't want to go through that process, right? So when the market's hot and you can sell lots no problem, a lot of people will buy that.
Yeah.
They'll flip the lots at the end. But builder's not going to create the lots. You don't have the front end that's going to divide it. And so
your key is doing both.
doing both, exactly.
And then understanding the capital stack too, because I don't think a lot of people would understand those debt structures and what you're doing and how to bring the money and how it makes sense.
So what do you do when you have 500 grand into it or 500 grand debt and you sell it for 340? Like, how do you bridge that gap?
People can't conceptualize the next phase.
Yeah, but you have a $400,000 asset. So that's where if you can understand pieces and you can break up debt and you can look at it in that aspect, which is sure I have 500 grand of debt or 500 into it, but I'll get 340 grand in cash in a sale and then 160 grand in debt somewhere else. And that could be structured where, see, on this project, you don't have the ability where you can just immediately go into a construction loan. So if you could permit those new duplexes while you're doing the land use, so this is why I like the cottages, is while we're doing the land use process, we can do the permitting process. And so when you sell house number 1, you can bring in construction loan on the same day. So you don't have to have that 160 grand of liquidity in the back end.
Yep.
And it sounds simple now how you're doing it to yourself probably, but like it took you a while to conceptualize and think of this because you went through multiple phases of, I think this is a deal. How's it a deal? This doesn't look like a deal anymore, right? And then you're like, okay, this is how it's a deal.
Yeah.
And it took me a while to understand because I got I don't know.
You had to build a new calculator.
Yeah, I got 2 hours, maybe 3 hours into this deal, dude.
So how critical is your architect? So for example, Matt. So the way I look at it is another reason people don't want to buy that is because you talked about it, trying to get 30 days of due diligence, where I would have been going for at least 60 in my aspect, because the way I look at it is, well, before I even go spend any money on the architect doing the site plan, I want to go through some due diligence myself, front end on the county. I want to do some inspections on the house. I want to get an idea what my costs are before I spend money on the actual due diligence portion of it. So
he can budget the house pretty easy probably right after walking it. So that's
sure. Yeah. But then you still need to rely on getting the right site plan from Matt. And so people new getting into it, they don't have the relationships.
Connections.
Yeah, exactly. Yeah. So
because yours is just pick up the phone, call Matt, and you got a ton of info right off the bat probably.
Yeah.
Yeah.
So why haven't you done that on my project?
So I was going to get to there next. Hold on. We do have to talk about that after this one.
We can.
But hold on. Okay, so how much are these people going to make? What's the end sale value and what's their return that you're giving?
If we build it out, sell the duplexes, I underwrote them at $725 sale price for each one.
Okay.
This is Kaiser. I mean, it's nice.
Yeah, so you
Part
feel
of
like
town.
you're
I think I'm pretty conservative, and they got a 47% return.
That's pretty good over a 2-year period or whatever it is.
Well, that was just ROI.
Okay.
Their
What's your
AAR
time
was
frame?
32% or something.
Okay, so that's your total ROI divided by how many months it's going to take you, basically. That's pretty cool.
So they were pretty stoked. Plus the exit plans, if we got to the lot split and we just wanted to take the money then.
But you could be off on your numbers and they could lose money, which is the risk that they understand.
Yeah. Which is why it's a security, not a loan.
I'm not sure about all that, but
they're helping.
It's
They're
a
working on
0%
it.
That rate. That sounds like a security to me.
No.
Nope.
0.1%.
Using words like ROI.
don't know. Okay,
They're projected. to profit off the deal.
That's actually that would make it a security.
Oh, dang.
it's whether or not they're assisting you in the process, which I am sure that they are.
Oh, yeah.
Yeah.
Okay, so you went into contract, did your due diligence, released earnest money, you closed on it today. What's the next steps?
Next steps is rehabbing house and getting the surveyor out there to stake it.
Yeah, and for people to understand like how you got to this point, if you're able to do this a lot easier and quicker, is you've done a lot of deals with similar aspects to this over the last 3 years that kind of taught you all this. So it wasn't like you just jumped in and were able to do this. Like you started rehabbing houses at first, and then you started doing some simple lot splits, and now you're combining it all together, which is cool.
Yep.
And you looked at 1 billion deals.
Yeah, I look at deals every day.
Yeah.
All day. So
Yeah. So let's talk about that, because now your next role is filling your pipeline, right?
yes.
And you keep seeing deals. I'm like, you should start putting these under contract. And then on our last episode, we were talking about Mike's deal, and then I texted you. Did he ever contact you?
No.
Yeah.
Okay,
This is
to
the
put
worst
this in-
action taker I've ever met.
So
I
Mike-
don't
Mike
believe
is-
that he's looking at millions
Mike
of
is a
deals.
distressed seller. He's got this lot already done. He needs to get out of it, and you are his solution, and you're not providing him an easy solution. What the hell? Why not?
Well,
What in the world?
I don't just sit at home and try and do deals all day. So I still have a W-2 job.
Hey, you should give notice after this.
After.
Celebrate closing day. Give notice. In fact, we're gonna text Chad right now.
No.
Notice
No.
given.
That-
Notice
no.
given.
There's a plan. I just bought another primary residence that I remodeled, and I moved into last week. So I've been busy trying to finish my new house so I can move into it,
Okay.
while doing the due diligence and finding or finishing this deal that we just closed on, so I can actually start working on it. And then we also just finished the duplex and sold that, which required quite a bit of my time to do all of the.
All right, well, we got 15 minutes right now, so let's hammer this deal out.
He can do 4 things at once. He can build a duplex, buy a house, do due diligence on one project,
And
Find
do
the
a
funds,
40-hour a
due
week
diligence,
and a 40
W-2.
hour W2.
Yeah.
And look for
Well,
deals.
it's
High
probably
efficiency.
like 25 hours right now.
So now you can get rid of the W2 and focus on my deal.
Okay, let's talk about your deal. What is it? Let's see how we would make it work.
How do you explain it? You've seen it.
Yeah, but I'm not familiar with what you want to do with it.
All right, let's talk about it. So what is it?
Or your
So it's a
original
corner.
plan.
Yeah, it's a corner. It's a good corner lot. It's like 110 by 98, something like that. It's like an 11,000 square foot corner lot.
Okay, so it's like a quarter acre.
Yeah, it's like an RM1 zoning, something like that, whatever it is here in Marion
What does that
County.
let you do?
So you can do apartments. You can do cottage clusters.
Too small for apartments, probably. Like you'd put a fourplex. Like
No, you can do it.
or
You could
on
easily
a quarter.
do it.
On a quarter, you'd be a 26 divided by 4.
You could do a 20 unit there, relatively,
Really?
without parking.
Is
You
that-
could do it
If you tore down the
relatively.
house?
You can do a
Yeah.
20 unit on
Yeah.
that.
I'm going to let Mike jump on
Yeah.
that.
It depends
I
on
haven't
what
looked
they're-
at it.
I thought it's
Depends on-
26 units per acre, roughly,
You know,
on that type of zoning.
maybe they limit it that way.
Okay.
Like
I think you
and
could
I don't
probably
know
get
their code
15,
very
though.
well. What's that?
I think you get 15.
Like you're allowed to. I thought it was 26 units per acre.
I think they're right.
Okay. Yeah, I'm not a developer, so I would default to you.
well, there's
guys.
like RM1, RM2, RM3. So
Okay.
They
It's all
typically don't have a maximum density.
That might be on-
They do density by size. In the residential zones, they'll have like units per acre, but usually in the multi-residential, they just have, you can build this large of a structure.
Okay.
This is your height requirement. This is your FAR.
Okay.
Stories.
I've looked at it from, I know I can do cottages there, and then from a setback standpoint.
So you already know highest and best use, you believe?
No, I just looked
Oh.
at it as I can put my product there.
Mm-hmm.
And so I bought it based on, this is what I do in Portland, and I can do it there, and I could.
And that is a viable project. It may not be highest and best use,
Yeah,
but it's
so-
a use that would be profitable.
Correct. So they wouldn't be permitted as cottages, or no, they would still be permitted as a cottage cluster in this zoning underneath the cottage cluster zone.
Okay.
Because it is a residential zone, so I can't do that. And so there's an existing house there right now that is a 3-ish bedroom, 2-bath house with
Okay.
a garage, living room. I have a couple different plans where I can keep the existing structure and build like 4 cottages around it.
Okay.
I can scrape off the entire back of it, make it a 2-2, and build 6 to 7 cottages, or I can scrape off half the back, and make it like a 3-2.
The back of the house, or what are you
the
saying?
back of the house.
So you would make it a smaller house and create
Correct.
more space
So
to add more cottages?
The house faces is on the front of one side street and kind of in the middle of the lot.
Okay.
So you can do like a shoehorn of cottages around the house and then make a courtyard that essentially goes down both sides of the house, right? So you have units facing the house, and then you have units in the back facing the street. And so you have like a courtyard shoehorn that goes around the house itself.
Okay. So
that's how I've got like 3 or 4 different site plans that you can build anywhere from 4 to 7 new units and keep the structure that's there. And then that's a no parking project.
Okay. And then how do you own title in this? Like, what's the structure you have?
I've got a land sale contract out on it right now. I paid $290, put $10,000 down. I've got 6% interest payments.
How long do you have left on your debt?
A year. I could extend it or I can refinance it. So I kind of looked at it as it was a place to just get a good project, and now I'm in this point where I have too much stuff going on that I can't plan it out.
Yeah, so he's in the same boat I was when I gave you the lot, right? And we did that structure where basically I'm not a distressed seller, but I'm a seller who has no time. I don't want to spend it on it. You bring me an opportunity that's economically advantageous to me, and I don't have to do work, and I get to make more money than just selling it free and clear, and then you get to plug yourself in and get some money from it. So I think you could do that same play here, and that's what you're thinking, right? He takes it off your plate, he does all the work, you still get to make money, and then you get to step into the deal.
Yeah. So like, for example, for me, I don't have a planner down here at all. So I have a survey, it's already like I have all this stuff ready to go, but I would have to create a brand new relationship with the planner, talk about all the stuff that I'm doing, how I've done it.
Yeah, you just don't have time.
I just don't have time. Whereas Matt, you've met Matt, you can go and say, hey, what's the highest and best use? What would you do? Would you spend some time on creating some concepts? Then you can bring that concept back to me. We can game plan it, and then we can ping pong it back with Matt. And I have a feeling that one of the things he'll come back with is you should just scrape the house and do multifamily. So you've got a 20-unit apartment building next door. We would do a no parking project instead of have parking, but it probably is better than that. There's actually
What?
Would we do this?
Wow.
20 unit?
I don't think
20 units is pretty. I probably wouldn't do that much. Maybe like 12 to 14.
We wouldn't do that. Too small.
You'd probably do 22-story like.
We're gonna take Jaryn's deal right now.
There is now further down the road, because this is Broadway, just south of like the Parkway, MLK Parkway. There's a sign now for a mixed-use project on the corner there, right before.
Just drove by that on the way here.
Stop.
It's that thing seems really stupid that someone would build something.
We are very familiar with that project.
Are you?
Yes.
Yeah. What is that sign?
We can't
all about?
talk about it.
Oh, really?
No, we should not talk about it.
Yeah, that's the type of design.
I'll tell you after.
That's a square in a peg hole or something.
That
like
one's pretty silly.
We'll tell you all about it.
Yeah.
But
yeah, so essentially, piece of raw land. I've got control over it for the next year without having to think too hard. My payments are like whatever that is, $900 a month, $1,200 a month, something like that. And if we can put together a viable structure, then we can then go create a partnership around it, go raise some capital, build it, rent it out, build it, sell it, whatever we want to do.
Okay, so it's just then making sure you can do it at the right cost for those general plans, and you can do that on the front end, and then make sure there's enough spread to hold it and create the equity to refi or if you sell. So what has been time has been your hold up on something like that? Because this is the perfect project for you, right? Size wise and everything.
Yeah. Well, right now is just setting up all of the resources so that when I do make the transition, that I have all of the time to go fill this pipeline. So making sure I have income for the next 6 months while I fill this pipeline. Making sure I have transportation since I drive a company vehicle. Having a new primary residence because I'm not going to qualify for loans after. So all of those things, yeah.
So you're setting like a 12-month foundation that you can just rely upon, so you don't need to extract any value out of what you're creating.
Yep. So like the last deal that we did on the last episode, I'm selling that currently. The lot split that I just did, I'm selling that lot. Just went under contract for $95,000. That'll give me my runway for the year to go fill that pipeline and make more.
When does that close?
The 7th.
Smart move. I like you selling that.
Yeah.
Selling
that's a
better
quick
than
turn.
building it. I love that.
Yeah.
Yeah.
Cool. So you've got your war chest. You got some money from some other things. You're selling a couple things. You're going to have your war chest. You're all set up. So you're going to go look at this deal now.
I've looked at it, yeah.
He's already been there. He's looked at the house. We've walked it. I've given him some site plans.
Yeah. I'm going to send him to Matt.
Because you potentially have equity in this deal right now, right? That you could leverage, or no?
I don't know what shit's worth down here.
Yeah.
I mean, in Portland, I would definitely have equity. Like I could create a plan around that and go recruit capital for it immediately, print money.
Well, I'm just wondering, like,
to build it out.
Potentially you guys go spend a little bit of capital and you get it all entitled and plans there. You create the equity pop, and that could be enough equity to just go do the project with you two after that.
No.
I
You
think
would have
it's
to bring capital.
Okay.
I think it's. I don't know that I got a great price on it.
Gotcha.
Yeah.
Okay.
Yeah. The market down here isn't what it is in Portland.
Okay, so next steps, Jaryn, you go look at this, see what you would build on it and what it costs, and then bring it to Mike so Mike doesn't have to do anything.
That was the other thing. I wanted to build the duplex to figure out my proof of concept, what I could actually build for, what finishes I can build for, all that stuff. So now that the duplex is sold, and I can break down all my numbers that we spent on it, it'll be really easy for me to go in and say, here's what I can actually build for. So that's going to help.
All right. Can you have this done by next week for us?
Yeah, sure.
Cool.
No, Matt's out of the office.
All right. 2 weeks.
Sure.
Why you want to bring him back on?
Yeah. See if it works.
Yeah. Sweet. Doing deals on Deal Junkies.
Nice.
Fuck yeah.
Heck yeah.
With the guests.
Cool. So how else are you filling the rest of your pipeline?
Looking at the market, getting my name out there, letting people know that I'm looking for these types of projects.
What are you looking for? You got a bunch of people listening to this.
People who have land that don't know what they want to do with it and want to contribute it to a partnership.
Why would someone do that?
Because they're not doing anything with it right now, and they don't want to sell it because they can make more money if they contribute it.
And you do all the work?
Correct.
I would vouch for this. I just did. It was awesome.
So you want people with free and clear or equity raw land with the ability to entitle and develop it further.
Yep.
And then you can do the work to create that extra value.
Yep.
How many deals are you trying to line up in your pipeline? Like, are you trying to be doing like once a quarter, once a month? Like, how many at a time can you reasonably do?
Well, it kind of really depends on
The deal type, sure.
Yeah. I'm gonna shoot for probably one a quarter.
Okay.
Like this Kaiser one, if I could get one of those under contract one a quarter, then that would be good to space them out like that too. Yeah. So that way you're not all in the same phases all at the same time. So
yeah. What do you feel like are your biggest fears or risks going into this and doing this full time?
Shoot, that I'd lose a bunch of money maybe.
Yeah.
And that really comes down to knowing your numbers correctly.
Yeah.
Good thing you have a Trevor.
Yeah, it's a good thing.
He loves
really
that
emotional,
part.
intelligent
And the proof of
question that
concept.
Trevor answered. And you answered it with no emotion.
Yeah, like one of the things when I looked at Mike's project and he's talking about this deal, I hadn't built the duplex yet.
Yeah. So it's
And when
hard
I
to
come
budget
from
out.
in construction, commercial and residential are very different. They're the same in like the general managing a project sense, but they're very different when it comes to price breakdown, materials, all that stuff. So when we're walking through a project like that, like I don't know what I can build a cottage for.
And then now you do because you went and built some resi stuff.
Yep.
Yeah, kind of. Yeah.
Somewhat, yeah.
Yeah.
I mean, each product is going to be slightly different.
Sure.
In how it's constructed and the timeline and how much it costs to construct that. But it'll give me a general census.
Yeah.
Whereas before the duplex, I didn't have any idea.
Yeah, because I'd imagine you're doing the same exact thing we are now. I imagine the problems you're going to face are right now you don't have enough deals. This is exactly what we did.
Mm-hmm.
Then you have all the deals, and then you don't have enough money.
Yep.
And then you have too much money, and you're like, I need more deals, and it keeps going back and forth.
Yeah, so that's the reason that I'm selling the piece that I just split off to give me that runway.
Yeah.
For not having enough deals.
Mm-hmm.
So I still have money to live
So
on.
this is similar to what you're doing. Do you have any advice for him as he goes into this? Like, because he needs to figure out how to make now money through the business aspect of it while creating the investment opportunities for himself and building wealth.
And that's why I got into P&Ls and financial statements and liquidity, and why I said it's great that you're selling that lot. Because in development specifically, you have to show cash in the bank in order to get your loans.
Yep.
And you have to be able to manage cash flows. So they're going to look for at least 6 months of mortgage payments plus
On every project.
plus whatever their equity requirement is. So for me, I get 90% loan to cost. So I need to have 10% plus 6 months worth of payments. On top of that, if you're doing something where it's probably like this is, one of the reasons you're not getting entitlement wrapped into your Renovo loan is because so much value is in the land. And so, like on my Northeast 60th project, where the residence itself did not bring enough value, where now I'm not getting my 90% loan to cost. So I got 80% loan to cost. I have to bring more liquidity. Then you also have to have your mortgage payments because it's still a big loan.
Yep.
And so then you have to also understand, well, how do I bridge the gap when you're going to sell it for $340, but you're into it $500? And so you have to have a financial map of where you're going to get down that road. You need to show cash in the bank to get those loans. And then you have to manage that entire process, which is you're going to have to fund closing. Right after closing, you're going to have to go fund your subs, but you don't have a construction draw coming in. And so liquidity is the biggest thing. I think a lot of people try to go from flipping to scaling flipping, or they try to go from flipping to building. There's a significant difference in liquidity from flipping one house to flipping 4 houses or building 6 units. The cash restraints are significantly heavier, and every error is magnified, like from a time standpoint, right? Like if you're 15 days behind on a flip, okay, you're 15 days behind on a $300,000 loan.
Yeah.
If you're 15 days behind on a new build, okay, you're 15 days behind on a $2 million loan.
Yep.
And so then your absorption rate. So we argued about absorption rate for like half of fucking last year, right? So as a builder, if your absorption rate is supposed to be 10 units per month, but you're only absorbing 2 units per month, that's okay. You're month 1, now you have 8 mortgages over.
Do you mean in terms of selling or renting out?
Selling, right? So you're absorbing, you're supposed to say you got 100 units, you're supposed to sell all of those in 10 months, right? Okay, so but instead of selling 10, you sell 2. Okay, so now you've got 18 mortgage payments in month 2 when you're supposed to have, right? And then at month 3, it stacks up again. And then month 4, it stacks up. So by the time you've stacked 4 or 5 months, you've got mortgage payments in excess of 10, 15, 20, 30 grand more than you ever planned for. And every month you go without selling those units, now you've baked that out. So most people don't have the liquidity to get through that.
Yep.
So selling a lot, very, very smart. Getting your paper set up where now you have a track record of building and selling something. You have a track record with rentals, right? So you can go get DSCR loans. You can go get construction loans. The W-2 side of it, like one thing that why am I like breathing hard?
More cardio.
What I would do now before you finish your tax return for 2025 is I would look at, because you've got your CCB, right? So you have your construction company started. I would look and see if you can take that money that you made in partnership with Trevor into actual W-2 income. So you're not losing W-2 income in your tax returns that you're providing to lenders.
Yeah.
So if that's the only other thing I would switch, but now you've got liquidity, you've got a track record, you have projects.
Yeah.
I think the biggest thing you're going to face is the stress. So you're going to have way higher stress levels because it's all dependent upon you. You're no longer working and just getting a salaried income. Everything is dependent upon you, which is awesome.
I'll be less stressed.
I think you'll be more as you realize, like, there's a lot more responsibility with all these things that you're going to see. It's way more reward, right? So it's worth it. And there's more enjoyment in it, but it is going to be higher stress. And a lot of it is learning how to deal with that stress over time.
I'm definitely pretty stressed, I would say.
I think it's both. Because like my W-2 job now is stressful.
In a different way, though. It's
if you're running 3 different projects and they all have timelines and you got to do all the stuff.
If those projects fail,
and
that's
I'm
on
doing
Chad.
my stuff on the side.
If those projects fail, though, that's on Chad. Now it's
there's
on
a difference when at the end of the day, all those the money going out of your bank account is solely responsible for you making sure you have money in your bank account.
Yeah,
that's significantly different than the level of stress that you take on working for Chad.
Yeah,
it'll be more rewarding, but be ready. Like,
but that's also a learned trait.
No, I agree.
But I think it's happy stress. It's happy stress.
Yeah, it'll be. That's what I'm saying. I think it's both.
Yeah,
like I think I'm going to be more stressed. I know.
And Jerry thrives under pressure.
But yeah, I'm definitely the type of person that doesn't. I like having something that's pushing me to bite off more than I can chew.
Yeah, you'll grow. You'll learn a lot, and then like it's cool to see where you've started and where you've gone to now, and how quick you've done it. Like you're one of the youngest people to be doing this that I know, and there's not even that many people doing it, so it's really cool to see.
Dude, 1 year ago. 1 year ago, you're talking about it.
Yeah, 1 year ago, you're just making stuff up. You're just talking
You
about
thought of
doing
the
stuff.
idea and you took all the steps and you conceived this dream and this idea into like reality, which anyone can do. But like you took the time, you stepped aside, and you're like, what do I actually want to do with my life?
I actually didn't do any of that.
Any of what?
I didn't think about what I needed to do.
Yeah, you
to
did, dude.
actually
You had a whole
Until the last
detailed
2
plan.
months.
You did it though. You still did it, and you thought of it, and you committed to the actions
Yeah, you
to get it
started
done.
a car and you talked about it, right?
Yeah.
Like you got on a podcast and you started talking about it. Like that is the process of getting started. You may not be conscious in the other next steps and how you decided this was the next best step.
You had the vision though.
Correct.
You formulated this vision, and you did the things necessary to do it,
Yeah.
which is really cool.
Just give yourself
inspiring.
2 or 3 more years, right? Like these guys have changed their vision significantly, but one of the things that they're really good at is identifying, oh, that's not going to work. That's not going to work. That's not going to work. And so it may kind of seem like chaos, but now they're significantly more focused.
Yeah.
Good. All right. Well, let's wrap it up. The only last thing I have to say is I keep playing Call of Duty and trying to invite you to my games, and you're rejecting
You
all
play
my
Call of
invites,
Duty?
dude. Yeah.
I want to play Call of Duty with
Do
you.
you have an Xbox?
Yeah, but my microphone doesn't work.
That's all right. I'll get you a new one.
No, I bought
Because
new ones. and it still doesn't
Jaryn
work.
won't
It's
play
like
with me,
the-
so I'll play with you.
You gotta get a new controller.
I got new controller, new microphone. I've done this 3 times now. I think it's an Xbox.
Somebody might have put parental controls on you so that you couldn't talk mess to children
Yeah.
on the internet, as you enjoy doing. All right. Well, thanks for listening, everybody. That was episode 1. We'll come back with Jaryn and talk about many more wonderful things. I don't really know what we're going to talk about yet.
Econ for Mike.
Probably some econ, probably some moving forward with Jaryn, and then maybe more deals. We'll see. Thanks for listening, guys. If you enjoy the podcast, share it with one friend. That's all that I ask. Just click the share button and send it to somebody that you care about, because it will drastically improve their lives. Thanks, guys. We'll see you next time.